Alright boys, big day last night, we've got some moves happening here now, and the first sort of pick up in volatility in a while. And so what you're seeing is with the release of Donald Trump Jr.'s emails, markets using that excuse to take a little bit of risk off. What you're not seeing is reaction in stock markets. You are seeing reaction in the bond market. This seems a little bit more of the sell-off you had to have in dollar yen, more yet than the start of something bigger, but you never know. As the market's selling off, it can definitely snowball into a bigger event, and day one of the sell-off is just as you would expect in the beginning of something bigger. So what do I mean by that? I mean that we made a fresh high above the high from May 11th, and it failed, stalled, reversed sharply. Okay, now regardless of the news and what's causing this is bearish price action, and suggests that the range is held top end. Now on the downside, it's significantly further away, down towards 110, so that whole open up area is what tech traders will be looking at. A couple more levels broken and the selling rallies will become the theme. Which trades are very vulnerable in that sort of environment? Well, the euro yen, which also broke a key level and is starting to come back down, and is now back below 130, and the pound yen, which has its own issues because of the pound side of the equation, and is also failing at pretty high levels from previously, and there's not exactly clear way forward for the pound right now in terms of a rally because of the uncertainty with Brexit and May, and the effect of the Bank of England maybe raising rates, maybe not, probably still in the maybe not scenario, given that Carney is the leader still, and he's more of the opinion of wait and see how Brexit negotiations go before removing the emergency sort of rate cuts that they've put in there. Now, this backdrop is fairly complicated. I mean, to me, given that Yellen's coming up, the bulls are still in control. Okay, but you have to be very wary about this sell-off, as if this could be the start of something bigger. So there is a very strong chance you get stopped out if you're wrong on this trade. If you're right in terms of looking to buy dollar yen or euro yen, the reward is that you have to keep on holding for a significant move higher. So we're looking at 133 on the euro yen, 116, 117 on dollar yen. If it goes back up, it's probably not stopping this time. The Trump Jr. emails, I don't think is a smoking gun that can bring down Trump. What it can do, and if it is going to work in a risk off sort of move, you would have to start seeing stocks be a bit more aggressive to the downside, and you would have to see it start to be more of Trump's agendas being derailed. So focus on the healthcare repeal bill not getting passed, focused on Trump's tax plan not being able to get passed, focus on the Russian inquiry getting more powers or getting more serious, and Democrats beating the drums. In that scenario, yeah, there is definitely a way in which dollar yen and the stocks go into a pullback, but the stock market's reluctance to sell off here, to me, suggests that the dollar yen's not going too far, too quickly. And the fact that you're getting euro selling and a little bit of pound selling as well at the same time seems to me that it's the yen cross network which is having a pullback, which needs a pullback just technically anyway because it's had such a big rally, more than this is the beginning of a risk-off period. So the excuse is given, the structure is broken, the market continues lower, not for any other reason than looking for the support. Alright, so the support, the latest traders who are long got squeezed out, where's the actual real support coming in? So I'm still looking to get long the dollar yen, hopefully around about 113 or 113, 112.80 into Yellen's speech with a stop at say 112.20. So a smallish stop, but if Yellen can stabilize and come back with the hawkish, then the dollar yen can reverse. If stocks remain resilient, then the path is open to the top side again. The euro and its move towards 115 is a big move as well. Like, this is so many things are happening at the same time. If it was to break the 115 and hold above it and close above it, then a lot more traders are going to be looking to the next levels, which is say 120, just to be a whole number that we can look at quite easily. So this is the resistance that we got in 2016 May, August 2015. The market went up, came back down very quickly. what can cause the euro to hold? ECB would have to ramp up its delay, lower for longer rhetoric. It would have to sort of delay market expectations of tapering, and the US dollar would have to get back on the front foot, right, from Yellen and Fed, and the US 10-year yield continue to rally, and the 2-year yield continues to rally. The scope for that to happen, I suspect, is not there so much. You might get a slowing and a choppiness. That would be enough. A choppiness for a couple of weeks does open up the door for the market maybe to look forward to the next thing, which is Italian and German elections, and maybe there'll be some sort of way in which the market can get lower in that scenario. Political uncertainty again. Alright, so there is ways that the euro stalls and goes back down. Don't think it's a slam dunk that we're going to 120. I suspect that over time it is going to be breaking higher though. That's why when we're looking at buying dollar yen, we can also be looking at buying the euro yen. Euro yen's just a more aggressive form of the same trade. Alright, so euro yen, where can we buy it? Ideally we want to get actually a lot further lower. 129 at least, but actually 128, 127.50 would be sort of the levels that I'd be hoping to get to on a more significant pullback. The dollar yen getting down to 112.80 probably only puts us down at 129 though, so we might be too early if we buy here on the euro yen, but I'm pretty bullish on the euro. I don't see the pathway forward where the euro doesn't go higher over time easily manifesting itself, right? So it's to me, you just remain with the trend, and the trend to me hasn't even halfway through. Yeah, so I suspect big moves are coming in the euro, especially as ECB gets towards that taper ECB meeting where they outline the expectations for the tapering program next year. Starting in December, I believe, is the market expectations at the moment. So yeah, I mean, it seems to me more technical, and just the market's giving the excuse that Trump Jr.'s email is the start of something bigger. I'm staying away from the pound in terms of the Aussie move, driven a little bit by the Aussie Kiwi, a little bit by the lack of Aussie follow sort of run with the rest of the commodity currencies after the RBA talked down last week. So this resumption uptrade, this is pretty normal sort of trading. I don't mind a little sell on the Aussie, or looking to buy Euro Aussie. Makes a lot of sense to me. I got stopped out of the original one, what we bought around about 150. But the Euro Aussie now is back at better levels. It's not like you stop your trend following just on the first pullback getting stopped out. I mean, the market has potential in this particular rally to go a lot higher, and the world in which the Aussie goes to 80 cents or outperforms just broadly the rest of the market is a world where China does really well, commodities rebound, and that's not really the forecast going forward. Or that the RBA obviously has that change to a hawkish bias. That would be very aggressive, right? Very aggressive, similar to the dollar CAD, the moves that you'd get in that sort of environment. But that also is many months away in terms of timeline or potentiality. All right, so it's one trade that it makes sense. Aussie Kiwi buying the dip as well. Just this is more technical than anything else. So buying the dip is now that it's broken that level. Looking to retest that level, perhaps, and buy, or just hoping on the momentum now that the market's picked a direction. You know, that's as simple as that sometimes. When the market picks a direction after stabilizing at sort of the buy zone, picks a direction, then goes back up. Unlikely for it to be fake, but you know, Aussie Kiwi does have choppiness in its history, that's for sure. But that looks like a pretty clean trade to get into if you haven't been trading. You haven't got a trade on, and it also avoids the euro and the yen and the US dollar madness. So there's reasons to be involved in some pairs sometimes that just don't want to have to think about some of the potentialities of some of these other pairs, which are going to be doing some big moves probably in the next 24 to 48 hours. I mean, it'd be nice to have a clean out, a stock market pullback, and a really big dip in dollar yen, euro yen, and pound yen, and we can re-engage the same trades when it stabilizes, find support. But you know, you don't always get that nice pullback that you look for. So a lot happening here. It's all happening at the Gabba. So what would you be looking at today? You would be looking at see how stock markets open in Europe, in the US session, and then looking forward to Yellen. This is sort of mean that we've taken the back seat to the dollar CAD. Dollar CAD's having a little bit of a non-event sort of scenario here, moving in pretty tight ranges ahead of this meeting. Now the trade, which is very sensible to me, is if we get that squeeze on a no hike. A no hike would be fantastic because the squeeze would be quite sharp, just because of the market expectations, and then the realization that they're probably going to hike soon, maybe next meeting, means that we can cap that rally and sell into it. Also, just a general short squeeze after they raise rates, goes down and straight back up with some hawkish, dovish commentary that might stop around 130 to 131, and that would also be a decent sell. With the trend, you've got that nice little pop high. You've cleaned out some of the Johnny come lately shorts. Got to get to where the core sellers are. Gold, it did spike higher on the back of the concerns, but given that we're looking to buy dollar yen, we shouldn't really be looking to buy gold unless you suspect this is the start of something bigger. And we'll quickly know in the next 24 hours whether we're going to get that bigger move. Gold will be above 12.30, and dollar yen will be below 113. So a dovish Fed could do that as well. So Yellen wants to come across concerned about inflation, concerned about wage growth, concerned about the outlook. The market will respond by taking rate hikes off the table in the next 12 months, and that would lead to US dollar selling at a stage of the game where the US dollar is very vulnerable. Dollar yen's vulnerable, euro's vulnerable. Basically, those are the two vulnerable ones, and also the gold would like to go with that as well. So that's my little opening rant. A lot to digest. Let's have a look at some of the researches that come out today. I mean, there's lots of commentaries. One of the most eye-popping ones that I saw today was HSBC put out a note, and this is pre the sell-off, that they expect dollar yen to end the year at 100. So 100, and let me make sure that doesn't pop up. We're more bullish than consensus on the yen. Let me turn off that camera, guys, because this is a huge call. Huge call. The US dollar strengthened on aspirations that have not been met. The yen weakened on promises that have not been kept. Cyclical, structural, political changes that were targeted but not delivered under the 3 arrows of Abenomics. And this is a story which can have legs. Abenomics requires that, you know, the PM Abe regains political support, or keep on holding political support in Japan. If that changes, and the market's faith in Abenomics reverses, and concerns that a change is coming, could definitely undermine the yen, undermine the dollar yen to the effect of making the yen stronger. Inflation has come full circle during this failed experiment, and dollar yen will full circle lower too. Expect dollar yen to finish the year 100 compared to consensus 114. So basically, it's a reversal of Abenomics. I haven't seen. This is a very big call. But these guys are giants. David Bloom and Graham Ma are giants in the FX analyst circles. So you don't just disregard it, but they almost want to create a story when there isn't one just yet. And you can probably go back in time, if this works out, and you know we start talking about Abenomics all the time, that these guys started it. Yeah, because this is the first time I've read it. This is the first time I've seen this as a reason for dollar yen to fall, sustain. Everything else is rallying against the US dollar, right? I mean, it's not inconceivable. The market turns, and the US dollar also sells off against the yen. I mean, imagine if the euro's on a rampage towards 125 as ECB begins tapering, and the US dollar's weak across the board, and every time euro goes up, dollar yen goes down. Then you get that sort of reinforcement of a trend, and dollar yen breaks 110, then targets 108. All of a sudden, you know, the stock market has a correction. You're at 104, 103. Then Abiy, you know, has some sort of political issue where he's losing support, and it just falls to 100. It can definitely happen, right? It can definitely happen. I don't think it happens if yields in the US continue to rise like they are and stocks don't pull back, but you never know. It's the market gets pretty aggressive when it turns, and this is, you know, dollar yen. You've seen some heavy sell-offs before, and if you're looking at dollar yen, don't forget, guys, don't forget this. Dollar yen's in a downtrend if you look at the monthly and a yearly. Yeah, this is straight up a downtrend, guys. 260, you know, down to 120, up to 160, 80, 140. You know, these levels have not been broken. Yeah, so you can't just say that, oh, yen's bottomed out, for sure. Alright, it's all about the market believing Abe, and that if they turn on him, it's going to change. And you remember that stock market rally, or the first rally that we got to in dollar yen, all the way to 125? That was berserk. That was insane. That was when they started their major aggressive moves. That 6-week rally in dollar yen was just out of control. So was the Nikkei rally that time. Alright, dollar yen's become fixated on yield differentials. Yeah. So how are you going to change that? I don't know, I think this is a bit out there, right? I think this is a huge call, and they're trying to start something which is not. I mean, it makes a lot of sense what they're saying, but it's just, it requires things to happen, which correlations in the market to come in, and a story to come in that is not actually there yet. It's like saying that Aussie Kiwi should be at 115 because interest rate differentials historically put it back there. These sort of difference between New Zealand and Australian forecasts, but you know, we're at 105 and we've been down at 105 for a couple of years. At what point does your thesis fail? So they're calling a timing on a trade before the trade's even started. It's a big call. Very hard to do, right? Very hard to be predict currencies at a 6-month period or 1-year period. We were going to parity, remember, on the euro. France was going to leave the European Union. Euro was over. Remember that? That wasn't that long ago, guys. That was the start of the year. Alright, early morning read. Let's see here. Will Mrs. Yellen choose to reinforce the recent more hawkish global central bank speak, or will she attempt to pull things back a little? Deutsche Bank expects her to reinforce the message from June 14 post FOMC press conference and continue to make guide the market towards an announcement of the beginning of balance sheet normalization at the September 20 meeting. If she does this, dollar yen is going higher, in my opinion, guys. If she talks about balance sheet adjustments, and if the senators keep asking questions, because sure as hell, if we don't understand it, they don't understand it. You know, the impact on the market, what it could be crazy, the impact on the market. I mean, it's... QE was never been done before, and then getting out of QE has also never been done before. These sort of numbers, these numbers are huge. These are trends. These start trends. You got the backing of the central bank getting out of the bond market. Maybe yields don't stop until you get the 5%. They all, you know, no one ever saw them going to negative. Literally no one saw them going to negative. 10 years ago, you ask interest rates go to negative around the world? No. How? No, that would be economic suicide. This is also very interesting. Politico is running a story about Gary Cohn. Let's see if we can find that. So this is potentially the new Fed chairman. Trump wants to get rid of Yellen. So you know, this is really interesting as a trader. Like, who is this guy? That's what I want to ask. I don't know who the guy is, and you know what I mean? Who wants to bet that he worked at Goldman Sachs at some point? Alright? Who wants to bet, like, I don't know anything about him at all. Who wants to bet that he worked at Goldman Sachs at some point? Let's have a look in and see what we can find here. So who is this guy? We're going to have to listen to him a lot in the coming years if he gets the job. Cohn would join several other Goldman alumni around the Fed policy-making table. Cohn began a career at Goldman as a commodities trader. (1990). I have this sneaking suspicion, just because a lot of his other nominees, he surrounded himself with a lot of Goldman Sachs guys. Wow. Wow, well, wow. Yeah, maybe I just knew that because of... Was he also in the, you know... I probably just have flashbacks from the, you know, financial crisis, right? If he was making comments, was he before the current little board guy? Yeah. Maybe he was like named a little bit in. Well, they're definitely something. Don't know if they're the smartest, but they're definitely something. Well organized. Let's see what else we can find for tonight. Everyone's saying the same thing. You know, I don't trust it when all the analysts get out there and say, oh, don't go selling dollar CAD on a rate hike because they're going to be squeezed. Huh? Bank out of fully high, so can't go down. Everyone get long. God, they've put that out there enough, haven't they? This has been pumping along for the last 3 days. A dovish float hike could lead to a break above 130. I say we sell into anything, right? Anything pretty aggressively. Any sort of risk, any sort of short squeeze, I reckon is going to be really, really short term. And I say we get short today, afterwards. You know, Yellen's speaking at the same time, so maybe she can also come across hawkish, get that squeeze all the way to 131. But we should be looking to sell into that dollar CAD squeeze, or looking to sell into, say, like a pound CAD, or sell into An Aussie CAD. That makes sense too. Probably leave Euro CAD alone, but you know, that makes sense. Maybe get into some CAD Yen. Okay, let's have a look at CAD Yen. How have you been traveling? Oh yeah, you're right for a pullback. You're right for a pullback. So at the same time dollar yen might be rallying, you could see dollar CAD moving a little bit more aggressively to the top side. So net dollar CAD CAD yen can get down quite easily. Let's have a look at some levels. Yeah, let's just buy at 87. In a scenario where Yellen's pretty bullish, I mean, I don't want to use a limit order, but I'm going to keep a look at if the dollar yen's rallying, but the dollar yen's rallying, but dollar CAD at the same time is getting squeezed, then CAD yen should still fall. Then afterwards, when we're looking to get long the CAD against something, we can buy the CAD yen. It's bugging out a little bit. You see this with MT4 every now and again. Alright. Oh shit. Jesus. It's climbed Mount Everest, hasn't it? Alright, we have every intention of trying to get into some long CAD yen tonight, but we're just gonna have to keep an eye on it, yeah. That's probably gonna be my little trade. Just for funsies, we're gonna put a little buy limit in, okay? How much trouble can we get into? How much trouble? The Bank of Canada doesn't raise, and Yellen is dovish. Wow. That'll be at 84 probably. I best put a stop on that. I best put a stop on that. Okay. I mean, it doesn't change my idea about trying to be long. I just don't want to. I want to be able to re-enter and just get out if something happens. Ah, thank you, GS Juicer. Are you from the US, mate? How do you know all this? Or are you into US banking stocks? Or am I just need to read the Wall Street Journal more? I have to admit my knowledge of US CEOs is lacking. I stay way too much in the Forex world. Alright guys, well good luck tonight. I may be around at midnight. It is getting on a little here. That's the time that Bank of Canada is happening. We do have the State of Origin on here in Australia, which is our big Super Bowl sort of game. This one's a little bigger than most of the decider of 3. It should be a good game, but I'll be around the room, and you know, I wish you the best of luck and keep agile in this market. This market's starting the potential for reversals, even in the euro, is there, and nearly every pair is in play. And it's been a while since that's been the case.